In this video, I review the price of gold in terms of technical analysis, and we look at what could happen in the short to medium term. Hello everyone, it's Sajad. I hope you're having a great week. So a quick update on gold. We have been going pretty much sideways and consolidating, but very much like a spring coil, this can potentially lead to big moves. So before we get on to the price action and the structure, I just wanted to discuss a couple of articles I saw recently that I think are really useful. Obviously, we had the Fed talking yesterday and none of it was a surprise. Jerome Powell kind of promising that there will be, 0% interest rates for, well, years pretty much. But one thing you have to remember is everyone thinks that there's this all-powerful kind of Fed that can simply control and manipulate all of the markets, but that's really not true, and that doesn't reflect back in what we see in terms of the price of various assets, and also, for example, the stock market, and also inflation targets. So their target is, for example, 2%. When have they ever met that 2% target? What is really happening? They can't actually control real inflation. They can control a part of it or a factor that influences it, but that is all. And let me show you why. Now, let's first of all just have a look at this article. So this is Yelp's actual data. So this is not stuff from government or central banks. This is Yelp data showing 60% of business closures due to the pandemic are now actually permanent. And remember, for most, especially Western countries, it's been a while now that we've been back reopened. Yes, there have been more restrictions, but generally most businesses have been allowed to open. And what they're saying here is very clearly, there is a massive proportion of businesses not opening again. Now, even if the real figure is less than this is still something that you cannot ignore. These are people, employers and employees, who will no doubt have to look elsewhere for income. And this is what I mean when I talked about a domino effect or a lag effect in recent videos. So the knock-on effects of this, we're only going to see in a few months, a bit later down the road. I find this chart useful because you see here the green lines are permanent closures, and you can see how it's steadily increasing, whereas total closures and temporary closures, we had a move down, but that's not a V-shaped rebound. So not everything has reopened again. And in this chart, you just get an idea with regards to business types. So you see some affected more than others, but like I've just said, there will be a knock-on effect because everything is kind of interrelated here. And I wanted to share this quickly as well because I found it interesting. Billionaire Richard Branson wants to raise $460 million for a new blank check company. So this is called a Special Purpose Acquisition Company, or SPAC. And this is basically a company with no commercial operations formed strictly to raise capital through an initial public offering. It's like a blank check company. And this can lure in a lot of retail investors, but it's crazy now that this is the current environment we're in. Now, it's very likely what he'll be looking to do after raising the capital is to acquire other companies. I imagine because he's foreseeing a lot of trouble ahead that he could get massive discounts when it comes to acquisitions. Now, we were talking about inflation, and one thing I just want to remind you of, and I've discussed this on the channel before, but I'll remind you here again, the banks have a massive part to play here with regards to whether we actually see any genuine growth inflation into the system. Now, the problem arises when people can't make their payments, and that's what I'm watching very closely at the moment. Are people missing payments? We're coming to the end of all of these different schemes and payment holidays, and the problem is when people can't make the payments, there's less money in the system. And also, if banks are particularly tight in terms of lending money, even though the Fed and other central banks generally, they want consumers to spend as much as possible because, for example, UK, US, most of our GDP is consumer spending. But if banks don't lend, or if consumers simply just don't want to spend anymore, if they want to save instead or actually pay off loans, this is not good for the economy, especially an economy that's based on consumer spending. So you see now that regardless of what central banks do or what the Fed does in the US, we're in trouble either way because the Fed really can't control what a consumer actually does. The Fed can set rates in such a way that you just make no money if you try to save. You don't make any interest, but possibly even lose money. But if people still prefer to do that because they're worried about their jobs, for example, and they're putting money away for a rainy day that they think very likely is going to come, then how can that be controlled? And this is why when you look at assets like gold, you have to remember that very likely we could be in a short to medium term continuing deflationary situation, or you could also call it disinflationary, which is sometimes a term that the central banks like to use. Now let's have a look at the chart here for gold and the structure. Now, one of the main things you're looking at when you see a sideways movement like this, one of the things I'm looking out for is, could this be some sort of triangle? So basically 5 swings sideways. Now this is still possibly what's being traced out here, so possibly an A, B, C, D, E. But if that's the case, then potentially we could be at the end here, and we tend to see triangles in wave B, X, or a wave 4. If it's a wave 4 in a bullish trend, then what would likely happen in that case is this move here, this impulse move, which we saw, will continue. So that would be a consolidation wave 4, and then we will continue upwards. And for that to happen, you should expect a breakout, ideally with volume above these highs. And I'm still waiting to see if that's the case. But if that is the case, then potential targets are, we're looking at 2200 upwards. But in the short to medium term, given the general situation, which I've just discussed with regards to deflation and a disinflationary environment, you would really expect gold actually to go in the opposite direction. But again, there are differing opinions on this. I mean, most people agree if we had raging inflation, then gold would go through the roof. But in a deflationary scenario, it's kind of unclear. Never in history have we really had extremely long periods of time with kind of near to 0% interest rate. The only time you would say we had something kind of similar was, well, if you go back onto a weekly chart, we can see that actually the years after 2012 onwards, all the way up to kind of 2017, those were periods with very, very low interest rates. And you can see gold was a lot lower than the 2011 highs. So the other scenario you have to watch out for here is that gold has actually topped out and is in the process of a much larger pullback. This doesn't mean the ongoing long-term trend is going to change, and that could still be bullish. But that pullback could be significant. It could be all the way back to the 1400 level, potentially. And in that case, what we're looking at is this was actually potentially an impulse down already, and now we're getting a triangle, but in a B wave. So we would get a continuation of this move at some point here, a follow through. So I'd be watching very closely now that price is kind of getting more and more constricted to see which way we break out. Watch out here for a false breakout, false meaning a slight breakout, and then the price suddenly snaps back. So if we see something clear here, I'm not actually involved in a trade with gold at the moment, but what I'm looking for here is if we do see a trade either way, then what you'd expect to see, for example, if it was on the downside, you'd expect to see an impulse down, some correction, a flag, and then that would be where you would want to enter, right there. And then you could easily mark off where your stop would need to be. And then you would just ride the trade. If it was going in your favor, you would leave it, because the thing is, if this was a major top and you're looking to short gold, then the downside targets could be very, very low potentially. And there's no way, even if you look at the kind of macroeconomic picture, there's no way you can really predict that. The only thing that gold seems to be following or tracking reasonably well is if you look at tips here. In fact, let me overlay the chart. Let me move to a 1 hour chart first and just overlay the price of gold. You can see there with gold, the blue line, see we're following reasonably similar here. And with the tips here, we had a high at the beginning of September and we've been much lower ever since. Same kind of an impulse move here, and it looks like flagging here potentially. So if we get a breakdown here, very likely gold is going to follow, or kind of like vice versa. So that's one scenario I'm looking at, and the other one I'm looking at is basically an upward breakout here, which could be imminent. And if it's an upward breakout, we've got some good targets. If that does happen, by the way, I'll update you all here on YouTube, and then I can give you an idea of some targets based on where we actually break out from. But there will be a couple of trades I'm looking at. One is a long trade to the 2200 area. But then once we get there, we know that if it was indeed a triangle, triangles precede the final wave, the final move. So then the fifth wave will be complete here, and that will be a medium-term top for gold, probably just before the elections. And then we will get a massive correction in gold. So a significant one, which could last, a few months to the downside. So let me know what you think below. I'm quite interested to hear if you've heard anything with regards to the price of gold. Are you seeing adverts at the moment? Sometimes you can get a lot of those when we're near kind of a short to medium term top, especially in the price of a precious metal. Also, let me know if there are any other markets you'd like me to cover. I will be doing another update on the S&P and oil very soon. Thanks very much for listening.